Okay, so now we'll move into the market update part of the presentation. And guys, what a market it has been, I tell you. So the duplex and fourplex trends in Ada and Canyon County have a story to tell. The inventory did slow a little bit. Now it's February right now, if I'm tracking the months already, although it feels a little bit more like spring. Our market's acting a little bit more like spring. And this data is mostly your January data. So it's coming from the kind of the trough of our cool market, our winter market. So it's not surprising that we saw inventory slowing a little bit, going from 23 to 19, with the Canyon County fourplexes making up some of that drop. And pending deals, however, they were up. There were some newer fourplexes in Meridian that helped drive that increase. Again, not surprised that the sales decreased, and we had a couple canceled listings in Canyon, and therefore the absorption levels also followed suit and dipped a little bit. And Ada County fourplexes and Canyon County duplexes are the only ones that have more than 1 month of inventory, where of course a 3 to 6 month supply of inventory would be what we would consider a balanced market. So the average price of fourplexes, let's see, here we are in with January 2022's data. Now these are, this is data Tony's been tracking for decades. And we look at the trends, there's not heaps and heaps of sales of fourplexes in Ada County. So if you get one section of time where there's a bunch of new ones that sell, or some older ones that sell, you can see some more dramatic differences in the prices here. And so January's prices included some resale fourplexes, some pre-existing stuff, whereas we had seen in December the closing of some new builds. New build closings, whether it's single family home or fourplexes, they're not quite as rhythmic as the flows of the markets are in resale, just because when people are putting it under contract, who knows when it actually closes. There's not just 30 days between contract and close. But what you're seeing is we've had fourplexes pushing as high as $1 million and going in the 850, 900 range as well. So it all depends on what you get. And we'll also look at, of course, the rents and the cap rates. And so here, as we get into those cap rates to help determine the prices, since we had some older sales in here, Tony's analysis included expectations of potentially a higher cap rate in January because those were older fourplexes. But instead, they were still in the high 3% range. But that red line here that you're seeing, that's your 6-month trailing average, and it's right at 4%. So when people are calling us and asking us what are cap rates doing, we're talking about, you know, telling you can expect about a 4% cap rate. And the days on market have climbed a little bit so far in 2022, but again, we're barely into it so far, and we're not at the, you know, heart of the heat of the season. But that first metric we talk about is a lot of times that price divided by gross rents, because it's the easiest thing you can look at a glance to try to put your finger on the pulse of the returns. And so we're seeing that rents are continuing to increase, which is helping that GRM hold at right about a 200.
What's GRM?
So here's where we start.
What's GRM?
It is the gross rent multiplier. So it's the purchase price over the gross rents.
Thank you.
Mm-hmm.
And I use monthly rents because it's a monthly gross rent multiplier. A lot of people use annual, but for me, it's easy math. I take my monthly gross rents and I multiply it times 200, and there we are.
Well, and I like the way you just said that, Tony, too, because if you're holding some properties, you know, that's a pricing tool. If you're analyzing something to buy, you know, you can use the formula that way as well. But yeah, if you're wondering what your equity is, you can do some quick math with a gross rent multiplier, just like that.
So lower is better,
Mm-hmm.
right? I understand that correctly.
Lower is better. Yes.
Depends if you're a seller or buyer.
Exactly.
Gotcha.
Anything else on gross rents? Tony, anything to add? You had a blog on that was pretty good.
Don't have anything to add to it.
Yeah, the blog, BoiseInvestmentProperties.net, is Tony's blog, and good one, worth checking out.
I have a quick
And he had
question
an
on
article
that.
talking about rent holding.
I have a quick
Pardon me,
question
Brett?
on that.
Yeah.
Tony, if you look back on the GRM kind of historically, I guess that if you look back, I guess 10 years maybe, was it the 100?
I haven't seen 100 since the 90s.
Okay, so
and-
this
and-
chart
and
is
maybe
probably
we
pretty
dropped.
good. Yeah.
Yeah. I mean, I'll be honest, it wasn't that long ago where I had to adjust my my graphs to go. I mean, when I set these up, I never expected to see something north of 200.
Yeah.
And when we got up to the over 220, I was like, oh, that won't fit in my graph, and I had to go adjust.
Yeah.
Just like I had to change the cap rates. I wasn't expecting cap rates to, because I had some data points that got sub 3. So
That's good. Yeah, thanks.
You bet.
Makes sense.
So a big part of the story on our real estate market here locally has been inventory. And this chart starts in July 2007. And you can see where inventory has gone and trended since then. You can see a little bit of the seasonal waves. But yeah, we went from a high of pushing almost 4,000 to a low of 100 or so. So we've had a big variance in what we've seen in inventory lately. And that inventory is going to, of course, affect those laws of supply and demand. It's going to be an indicator of what our market's doing and something that we want to watch. And with the single family homes, with cap rates going to the 4s for multifamilies, Tony and I have done a lot more single family investment purchases together. And with that single family home trends, those are relevant as well. And so let's look at those single family home trends where the red arrow is pointing at the blue line here. You're seeing that this is where we're at right now with homes listed by week, comparing several years running here. And they're saying, the Boise Regional Realtors brought this data together for us, and they're saying this is slightly higher than what we've seen. So will we continue to see inventory grow? It's something we'll watch. And this is a comparison of just the months of January. Closed homes, you can see that seasonality that we're talking about right here. And this chart also goes back pretty far and goes as far back as 2009, probably January is right about here. And each of these troughs is going to be somewhere around this time of year, somewhere in the seasonally cooler months. So our spring feels like it's picking up a little bit more quickly. If something wasn't selling last month, that's not an indicator that it's a dog of a property. It's just an indicator that our market this month followed some seasonal trends in terms of closing deals. In 2020, we didn't feel the seasonal trends as much, although this data shows that it was still there, but it felt like our market was very hot and it just didn't relent. Whereas is what we're looking at now. The inventory, of course, will affect the prices, and we've seen a change in single family prices. That blue line shows what they've done since 2019, and those little bars show the wait a second, actually. Oh, yeah, we're also showing the year-over-year change in median sales price, as well as an overall median sales price trend. So the trough that we just saw in winter, say when that River Chase home didn't sell, but suddenly it sold with multiple offers, that was listed following this peak in June or so. Is that June? Yeah. Well, I guess May was the peak, and then it started dipping a bit. So late last summer, we saw that fall cool down or whatever was causing that trough. We saw it hit a little bit sooner than we had in a long time, and it seems to be reversing. At least that's what we're experiencing right now in the marketplace. So we're experiencing difficulty in finding single-family homes that investors can actually purchase. So some builders are ruling out investor purchases. We're seeing, while inventory is supposedly picking up a little bit, we're not really experiencing that. We're seeing multiple offers, even though it's February. And in theory, maybe we should still be more in that trough type cool season. And here's what we're seeing in terms of single family homes in our market compared to what's going on overall. Idaho usually follows national trends, but maybe lags behind them, but we've really been blowing median prices of homes out of the way when it comes to the nation, which is at $305,000, or in the regional West, which is at $450,000. So here we are in Ada at $540,000. Now that's actually lower than last month. Last month we reported $546,000, but this is lagging data from that seasonal trough. And while we're not expecting, and the Boise regional realtors are not expecting prices to increase as much as they have, last year, January 2021 to now, they were up 20% in Ada County and 25.3% in Canyon County. We've seen just huge growth. Investors who've purchased have just made big money in returns. The rents have also been increasing, as you've experienced, but in this market in Boise, in the past decade, a lot of money has been made on the equity and those changes in median prices. So here's a look at inventory where they're seeing it. We're seeing it go up year over year in Ada, which is also has our days on market going up a little bit. Our prices are up, and then our number of homes sold are up, with Canyon County being similar, but just following similar trends with different numbers. So we're talking about affordability. I presented this slide last month, and I left it in here just because it's a question that we have been asking a lot. With the prices going up and up and up, and the rents going up and up and up, supporting those prices by way of that more stable gross rent multiplier, we're seeing the ratio of rents to purchase prices holding, but I don't know at what point we hit a ceiling of what tenants can pay or what people can afford to buy into. But think of your first homes that you all purchased, because most of you who are here already own homes. And then you do that first, and then you start investing, right? Can you imagine your first home, if you wanted to put 10% down or even 20% down, having to come up with $100,000? I mean, they're coming up with $100,000 just to get into the home ownership. And the rents, what they're paying in a mortgage is very similar to what you might be paying in rent right now. Rents for these newer homes, we've been running the numbers on 3 or 4 bedroom, 1,800 square foot, 2,000 square foot homes that are newer and nice. And those rents are around $2,500 a month if it's a single family home. It's a big outlay, just a big difference from where we were a while ago. We've got to have some new market data coming up soon, but vacancies are still low. They're going to be seasonally higher. We're going to see things start to rent up a little bit more quickly as we get closer into spring. So for our clients who have been purchasing new properties or had control over when the lease up would be, anytime we can have that push towards spring, it's going to be more favorable for those rent prices. And I'll do a little more on rents next month, but for now, what is out there? So we're talking about, here's what these fourplexes are kicking off for returns. But what can you buy if you're interested in a fourplex right now? If you're interested in a single family home, you're looking at about $500,000, and you can get a brand new single family home for somewhere around that if we can find you one of the last 3 homes out there in the county that's available for investor purchases. And it'll be nice, and it'll be new, and it'll rent for a lot, and it'll be around a 4 cap. In terms of your fourplexes, we actually have a few open on Lexi Lane right now in Nampa. And this is higher than they sold for last year at this time. Of course, that's what the market's been doing. But they're nice. They're about 15 years old. So some of those are going to, at this price, you're going to get maybe 2 of the AAC systems are going to be original on a 2005. So they'll be at the end of their life expectancy, and probably have some original furnaces and only 1 layer on the roof, and probably some time left on that roof. And then interior finishes are basic, but these are nice units. They've got 2 bedrooms and either 2 or 1.5 baths. There's 2 different layouts, and they're a nice fireplace, vaulted ceiling, and really vanilla finishes, you know, carpet. Rents have gone up there too. It's a nice community, well maintained. And then the Plummer Road community in Star is pretty nice, but that's got, you can't quite see that, but that's got really high days on market. And I think they were just pushing that price for Star. People are just not ready to pay, or haven't so far been ready to pay the $925,000 for a fourplex in Star yet.
Well,
so if you need performance on any of these, let us know. Did I hear a question?
It was Tony. I tried to get information on that Plummer, and I just gave up after 2 weeks. So,
oh, is that why it's on the market so long?
I had interested people, and we couldn't get the financials or a rent roll.
Well, that'll keep it on the market for a little extra time.
Yeah.
Huh. But that's a nice community too. I like it over there. Just straight shot down State Street. Five plus, we talk about often how we have more fourplexes in this market than 5 plus. So the fourplexes really set the trends in terms of returns expectations. But and you can't necessarily count on economies of scale going larger just because there's a lower supply for 5 plus. But here's a look at what we have out there right now. Not a ton. That's all of Ada and all of Canyon County.